Hello everybody, I'm Hovannes and welcome to my channel. Today we're going to discuss about how some retail investors from WallStreetBets forum on Reddit managed to squeeze hedge funds into the corner. But before we do that, we need to understand what is stock shorting. That's why we're going to first dive into that and trying to explain with simple words what is stock shorting. Normally when you invest in the stock market, you're buying shares of a company and you're becoming a part owner of that company. So when the company makes profit, you're eligible to part of that profit. But sometimes people, or mostly hedge funds, will borrow shares from a brokerage and they will sell them at the current valuation, at the current price. Why do they do that? Because they strongly believe that they will be able to buy those shares at a much cheaper price and return them in time. Why would they do something risky like that? Because if the shares go higher, they'll lose a lot of money. They do that for two reasons. Because sometimes shares are the price of the share might be much higher than its real intrinsic value. The company might be valued at a much higher value, and they are hoping that until the time comes when they have to buy those shares and return them, the real value of the company will be clear and the share price will have gone down. That's one of the reasons. The other reason is because those hedge funds are really big and they can move the price of the share. They hope that by dumping a lot of borrowed shares in the market, they will drive the prices of the shares down. They'll scare off also other owners that have the share because they'll be scared to have to sell it at even lower price. So they will sell those shares. So there are a lot of shares of that company in the market. Prices go down. They'll buy back the shares they have to return, and they'll make a huge profit. But it doesn't work always like that. So what happened? Investors from the subreddit called WallStreetBets realized that the stock is over 100% shorted, and if they go in and buy shares at those low prices and they keep them and they hold them, they're gonna put the hedge funds in the corner, because those hedge funds have deadlines and they have to buy those shares back to return them to their brokers, and they'll have to start offering higher and higher prices to persuade the shareholders to give up their shares, because they already knew that the hedge funds have those deadlines. So that's exactly what happened, and the shares went up and up and up and up over hundreds of percents in just a few days. Today the stock was down 30%, but it's still much higher than a few days or a few weeks ago. So this situation has started a war between the hedge funds and the retail investors from the Reddit. It also has divided the financial world into two opposing fronts. One part is saying that this is market manipulation, and people talking to each other, posting on the Reddit and agreeing to manipulate the market to squeeze out the hedge funds, it should be illegal. On the other front is saying that no, that's not illegal. The ones who are in fault are the hedge funds, because they were shorting the company over 100%, which is crazy. And another argument to that side is that hedge funds are manipulating the market all the time. So now that they are getting squeezed from retail investors, from those small investors, they should be held accountable, and Reddit investors should be able to get away with it and make those big profits. So what do I think about it? I think that the stock market should not be allowed to be manipulated, that the regulatory authorities should make sure that nobody can manipulate the market. But should we go after those small investors? I don't think we should start there. I think that first we have to make sure that those big players, the hedge funds, cannot manipulate the market. Do I think the subreddit investors are doing the right thing? I don't know. Thus, I don't call that investment. That's mostly speculation, and it's not my domain. I don't do speculation. I don't want to do speculation. And even if I did speculation, I would do it only with 1 or 2% of my net worth. If you want to do something that's risky, which I don't suggest, but please don't do it only with the money you're ready to lose, because that can very much happen. But what do you think about this? Should the regulatory authorities do something about this, or let the market self-regulate? Please write down your opinions in the comment. Also, subscribe to this channel if you like it, and if you like this video, please like the video, because I just started this channel and it's really helpful. Thank you for watching. See you next time.